What's up? Coach B here. This is the week ahead. Here's the setup that nobody's talking about. 5 of the hottest stocks on my board just got crushed. Every single one of them red on the week, and the VIX, the market's fear gauge, barely moved, sitting calm at 18. Rocket Lab down 21%, SpaceX down 17, Palantir down 12, Nvidia down 9, Tesla down 5, and on top of all that, this is a holiday shortened week. The market is closed Friday for July 4th. So every catalyst gets jammed into 3.5 days. Let me walk each name, the real chart, the real option chain, the levels that matter, and how I think about it by time frame. Let's get into it. First up, the biggest mover on the board, Rocket Lab, ticker RKLB. This one fell off a cliff from about 150 down to 80 in a straight line, a 21% drop just this week. It's trying to bounce off 80 right now, sitting at 84.5. So the two levels I care about, 80 on the downside, that's where buyers stepped in, and 150 up top, which is a long way away. Now pull up the chain and you see the catch. Implied volatility is 84%. The options are pricing about a 20% move over the next month. That is expensive. So how would I think about it? For a day trader, that volatility is the whole point. You get big intraday ranges to work. For a swing trader, I'd want to see 80 actually hold before I trusted the bounce. And for a long-term investor, after a drop like this, I let it calm down instead of catching the knife. Same stock, 3 completely different answers depending on your time frame. Next, SpaceX, ticker SPCX. The round trip continues. It ran all the way to 211, and now it's all the way back to 153, down another 17% this week. It's sitting right on 153, which is the lowest it's closed since it went public. So that's the level that matters. And here's the read across the whole watch list. SpaceX implied volatility is 72%, expected move about 18%. These freshly public high-flying names carry the most expensive options on the board. For an investor, I'm still holding off on a stock this new and this volatile. For a swing trader, 153 is your line. Lose it and there's no support underneath. Hold it and you've got a base to work from. Third, the retail favorite, Palantir PLTR. It ran to 160, then dumped all the way to 107, and it's bounced back to 113, down 12% on the week. The line in the sand is that 107 low, and the chain tells you why you can't just buy calls and hope. Implied volatility is 50%, so you're overpaying for the move. If you think it bounces, a spread makes more sense than a naked call because the spread caps what you pay for that expensive volatility. For a swing trader, if 107 holds, that's your setup. For an investor, you wait for it to prove 107 is a floor, not just a pause on the way down. Fourth, Nvidia, NVDA, the steady mega cap of the group, and even this one slid. It came off 224 down to 192, a 9% week, and it's sitting right at the low of its range. But notice the difference. Nvidia's implied volatility is only 37%, expected move about 9%, so the options here are actually reasonably priced, way calmer than Rocket Lab or SpaceX. For an investor, this is the core holding of the bunch, and it's on sale near the low. For a swing trader, 192 is the level to watch. Hold it, and the range is intact. Lose it, and you give it room. Fifth, Tesla, TSLA, back near 400, down 5% on the week, the smallest drop of the group. The range to know is 375 on the downside, 442 up top, with IV around 45%, right in the middle of the pack. For a day trader, that wide range is the playground. For an investor, the question is simple. Does 375 hold? If it does, the trend's intact. If it breaks, you get cautious. One level, 2 completely different decisions depending on your time frame. All right, now the calendar, and this week is different. There are no big earnings, but there's a wall of jobs data, and it's all jammed into a short week. Tuesday, JOLTS job openings at 10 Eastern. Wednesday, the ADP private payrolls report in the morning, plus ISM manufacturing at 10. Thursday is the big one. The June jobs report, non-farm payrolls at 8:30 Eastern, and it got moved up from Friday because the market closes early Thursday at 1 o'clock and is fully closed Friday for July 4th. So the jobs report is the one print that can move the whole market this week. A hot number, more jobs than expected, pushes rate cut hopes further out, and the high volatility names we just talked about, Rocket Lab, SpaceX, Palantir, those get hit the hardest because they're the most sensitive to rates. A cool number, the opposite, risk back on. And because it lands on a half day right before a long weekend, moves can get exaggerated on thin volume. Even if you're not trading the number, know it's coming Thursday morning and size accordingly. Quick reminder, this is education, not financial advice. I'm not telling you to buy or sell anything. Do your own research. Everything here is a teaching example to show you how to read a setup and how a time frame changes the answer. That's your week ahead, 5 beaten down names, a calm VIX, and a jobs report on a half day. If this helped you walk into Monday knowing exactly what's happening, subscribe and I'll break down next week's setup for you too. And drop a comment. What ticker do you want me to cover next? Good luck in the markets, no matter what stock you're into.